Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we will take a look at the Japanese yen because the recent rally on Friday across the board among the major pairs, so that has led to appearing of interesting moments on the different currencies, and in particular on euro currency, the recent thrust up, some profit taken on the recent downward trend on the euro currency has confirmed appearing of the possible retracement, and right now the euro currency stands closer to starting of upward bounce and to appearing of the double recall high pattern on the daily time frame chart. But since this analysis and this situation stands in a row with our former analysis that we have created on the previous week, and in fact the recent action involved in recent analysis, so I do not see any necessity right now to update the situation on the euro currency, because you just could compare what we have said on the previous week to the picture that you have right now, and you will see that the action stands in a row with our analysis, and it's very easy to make the conclusions on the current situation on the euro currency. That's why today I have decided to take a look at the Japanese yen, because previously we have made the weekly update in March. It's almost a half year ago. So and what is more interesting right now on the Japanese yen, that analysis that we have prepared half year 6 months ago is still valid. It has not changed strategically, although there is some progress on the price action with this analysis. It needs some update, but strategically the targets that we have specified, the patterns that we have mentioned in March are still valid, and the overall situation doesn't change our opinion. But why I have decided to take a look at the Japanese yen, because right now market has reached some sort of the boiling point, the crucial moment that probably will clarify the further action for the medium-term perspective. And right now you will understand what I am talking about. Well, the Japanese yen, the specific of the current situation on Japanese yen stands on importance of the higher time frame chart pictures. I mean monthly chart and weekly chart, because there are two major patterns that will probably will dominate and will drive the medium-term action stand on the higher time frame charts. On the daily chart, on the intraday charts, we will see only the tactical moments that will be important for the coming week, but they are just the small moments in the overall picture. And that's why I suggest, guys, as usual, take a look at our weekly research and read analysis of the higher time frames, so you will be able to see the big picture and how different situations on the different charts could be combined in the whole picture, in the whole analysis. Well, on the daily time frame chart we see that the major pattern here is this triangle. Inside of this triangle you probably could find a lot of potential butterflies. For example, you could find this butterfly. We even have discussed this. Okay, here you could find the butterfly, because that low has been tested, has been taken out by any lows. Here you could find probably smaller butterfly, right? Another butterfly here you could find. This could be left wing, right wing, but all of them are just details. The major pattern here is this triangle. You also can see that the lower border of this triangle coincides with this confluence support around 100 even point on the Japanese yen. And market stands with this support and stands in this consolidation since the start of the year, since the January. Okay, Briefly speaking, on the weekly chart, this consolidation could be treated as the bullish dynamic pressure, because trend on the weekly chart is bearish, but price action stands flat and has not started downward action, has not confirmed the trend with the bearish action since the January. That's really important. And this is the potentially bullish pattern that suggests the taking out of this top. I mean the weekly dynamic pressure. Suggests the taking out of the top. Second, on the monthly time frame chart here was formed the bullish stop grabber. And although there are almost 5 months have passed since this grabber that has been formed in February, market has not erased it, because this low is still valid and the pattern itself is still valid. And what we see on the daily chart, on the previous week we've got this breakout through the neckline that lasts since the start of the year, or even since December of the previous year. The trend line has been broken to the upside by the price action. On the previous week, market has returned right back down and retested this trend line. That's very typical for the breakout of the long-term trend lines. When the market shows the breakout, retested it, and then starts to move up. Now I'm speaking about the theoretical normal development. I would like to say that currently it's absolutely obvious that market will continue to move up. But what I would like to say is that market right now stands at a crucial point, because market here has no choice but to estimate direction. Because if market will hold here and turns to the upside, that will mean that market is really bullish and have intention to continue move high, and we will get the medium-term upward trend that suggests the taking out of 105 top on the Japanese yen and possible action to the 106, 106.50 according to our targets on the monthly chart. But if market will fail here and turn right back down, this will be failure breakout. That will mean that at least the upward action will be postponed. But if market will take out of these lows, break through this confluence, that will mean that the bullish setup and bullish patterns have been destroyed and market will turn to the downside. That will suggest the Japanese yen appreciation. Fundamentally and economically, you guys probably know better than me that the situation is favorable for right now for the US dollar. Due to the situation, due to some weakness in the Japanese economy, and that the easing policy, the spending stimulation program on the Japanese government still continue. From the other side, the growing tensions gives more value to the United States dollar, and the positive fundamental and economical data that comes from the US is also supportive for the US dollar. That's why fundamental situation absolutely doesn't contradict with the technical picture. And that's why I call this moment as the crucial and the important, because right now market should choose the direction. It has no more time to think as it was inside of this triangle. So the consolidation for the 6 months, no breakout, nothing at all, just waiting. But right now the breakout has happened, and market have only one choice, either to confirm or fail. It's only, and this will be estimated probably in the nearest week inside of this, right at this point. On the 4-hour time frame chart, we see normal action when the breakout has happened. So this breakout, first upward swing, significant swing, deep retracement. This market has completed the agreement, so ABCD 1618 target, right at the 101.84 deep 618 fib support from this most recent thrust up. Okay, so market has shown, so market has made all necessary steps for the breakout. The preliminary steps that should be done already has happened. I mean, first step is the breakout, second step is the deep retracement and retesting of the broken line. So there is no reasons for a bullish markets right now. The bullish market, there is no reason to continue move down, because this market is really bullish. This market should, it already has shown the breakout, already has retested the broken line. That's all. The only direction that it has is only move to the upside. If market will not move to the upside and turn to the downside, it means that market is not bullish. That's why the current moment is very significant, and that's why I have decided to dedicate current update to the Japanese yen. So that being said, on the long-term chart, market is showing bullish patterns, and on the short-term charts, market also showing bullish action. But although currently we do not have yet the clear patterns to take the position, at the same time market stands at the very important moment, and our task will be to watch what will happen. And after that, we will find the moment to take the correct position with the development that will follow on the Japanese yen.